Hello everyone out there, this is Peter Harris with Commercial Property Advisors. I hope you're all doing well today. Today I'm going to share with you how to reduce your taxes using commercial real estate. Let's get started. Alright, we're going to start right here. I'm going to start off by saying this. You don't pay taxes. That's right, you don't pay them. They take them from you. So in this video, what I want to share with you is how they can take less taxes, how you can reduce your taxes by buying and investing in commercial real estate. I'm going to do that by sharing with you the 3 stages of a smart commercial real estate taxpayer. This is what we exactly teach our students. Let's get started. Here is stage 1. This may be you, okay? You have a full-time job. You work at the post office, you work in IT, you're an engineer, you're a nurse, you're a doctor, you work as a manager someplace, you're an accountant, whomever you are, this may be you, okay? And guess what? You own no real estate investments, okay? You may own a house, but that's about it. And guess what? You pay the most in taxes, okay? You do, and you know it, right? And you get no tax write-offs, right? So money comes in from your job and you pay Uncle Sam, or they don't, remember, you don't pay, they take it from you, okay? So again, this video is about how they can take less from you, right? So you get no tax write-offs, but guess what? Don't stay here. This video is about teaching you to not stay here. We're going to share with you how to not stay here. Got it? Okay? All right. Here's a smart thing to do, okay? Remember, these are 3 stages of a smart commercial estate taxpayer, okay? I'm saying that we are taxpayers, okay? We're not avoiding taxes. We're just taking advantage of all the legal loopholes to make sure that we don't leave money on the table, okay? I'm not against paying taxes. All right, so the smart thing to do is to buy commercial real estate, right? Perhaps you can join our program. Now, I am not a CPA or a tax attorney or all that. I hire the best CPAs, the best tax attorneys, the best people to study my properties, to do studies so we can maximize the tax savings. These things cost money to do, but they save us hundreds of thousands of dollars, okay? Not tens of thousands, I'm talking hundreds of thousands of dollars, okay? All right, now, this is stage 1. Again, this may be you. Is this you, okay? Don't stay here. Got it? Okay, let's go to stage 2. This may be you, okay? So let's say that you have a full-time job and you own a small apartment building, or you have other real estate holdings, or maybe you joined our program, okay? You joined our program, okay? You joined us and you purchased a small apartment building, something that's small, okay? And now you qualify for the legal tax loopholes, right? You're limited, but you still qualify them now. Whole lot better than this side, okay? So up to, if you make up to $100,000, you can reduce your tax burden by $25,000. That's huge, right? You have none of that over here because you don't own anything. Now that you own a smaller apartment building, you can write off up to $25,000. Got it? Under one apartment building. Now, once you start making $150,000 a year in your job, this $25,000 tax deduction starts to fade out, okay? But all is not lost, okay? All is not lost. The smart thing to do here is to stay disciplined, okay? Discipline equals freedom. Let me show that with you. Stay disciplined, buy more commercial real estate, okay? 10, 15, 20 years ago, my friends, my family, my close associates, they bought bigger homes. They bought bigger cars. They bought all these big things. I didn't. I stayed disciplined. I bought commercial real estate, okay? So today they have these big homes, okay? I have still my same home, but guess what? I have multiple homes around the States, vacation homes around the States, because I stayed disciplined, okay? They're stuck in this one home. I can work from 5 or 6 different 7 places. Got it? All right, that's where I want you to that's where I want to take you. And guess what? Commercial real estate pays for all of that. None of that comes out of my pocket. Got it? You can do the same, okay? Now, discipline equals freedom. So you're going to buy more commercial real estate, and then ultimately the next step, the ultimate step, is to go to stage 3 of being a smart commercial real estate taxpayer. Let's go to stage 3 right now. It will blow you away. Let's do that next. All right, here we are, stage 3. This is the ultimate stage. This is where you want to be eventually through your commercial real estate investing activities. This is your ultimate goal, okay? All right, stage 3, where you want to be eventually. You want to become a real estate professional or achieve real estate professional status, okay? You want to become a real estate professional per the IRS rules, which basically states you must own property. Half or more of your time spent, okay, should be on real estate activities than anything else, meaning that you can't have a full-time job and be a real estate professional. You have to choose one. You're going to be a full-time real estate professional, right? You must pass the 750 hours test, meaning that throughout the calendar year, you must be, at the minimum, put in 750 hours of work hours into your real estate properties and activities. The last test is the material participation test, where you must be materially participating in your property, in your business of commercial real estate, which is not too difficult with the way we teach our students to manage their properties, okay? Manage their properties, to be materially involved, okay? So real estate professional is a status that you want to achieve. It's a real status that's defined by the IRS. I am a real estate professional. I am the head coach in our company. We have other coaches. They're all real estate professionals because what they do is commercial real estate, okay? You want to achieve the same thing. You want to be a real estate professional. It's not too difficult to achieve. Let me explain what the benefits are. Number 1 is you get unlimited write-offs. You can write off everything, okay? These pens, I write off. This whiteboard, I write off. This office here, okay? This office here is written off every year, okay? Every year I get to write off. I have no limitations of what I get to write off. Up to hundreds, if not millions of dollars, I get to write off every single year. No limit for me because I'm a real estate professional. If I were just a high-paid professional making $1 million a year, I would have substantial income taxes to pay. As a real estate professional and you're smart, you should pay close to nothing. Got it? That's how big this is. Okay? So unlimited tax write-offs. This is how the big boys, the billionaires, the multi-millionaires, worth hundreds of millions of dollars, this is how they pay no taxes. They do this, okay? And there's strategies behind this I'll share with you in a second, okay? Now, who can qualify? Either you as a single person or your spouse can qualify. So if you are a high earner, okay, and you're married, okay, you can keep your job here, okay? You can keep your job and then have your spouse become the real estate professional and you qualify for all of that. Got it? Okay. Real estate professional status is what you want to achieve. Now, I know I use a lot of big words here and it was very vague. Now, I'm going to jump into 2 real-life examples of our students, okay? And I will share with you why it's so important for you to achieve this status. Let's do that next. All right, we're going to start right here. I'm going to give you 2 real examples. I'm sure you can relate to both these examples, okay? So, this is stage 1 investors. So most of our students are stage 1 investors, okay? And they have a full-time job. Perhaps they only own their home, okay? And that's completely okay where to start. Just don't stay there, okay? All right, so they have a W-2 income. They earn $100,000 a year. They have a home mortgage. They can write off $25,000 of that. They can put money, contribute to the IRA, write off $5,000 of that. They have other expenses at $7,000 in write-offs. So their taxable income comes down to $63,000, right? So they made $100,000. They have all these deductions here. They're going to pay taxes on $63,000, all right? And you may think from 100 to 63 is good. It's not. It's not. This number needs to go towards 0. It actually does. And you do that by going to stage 2, which is buying yourself your first commercial real estate property, okay? And that will reduce this number drastically, okay? Now, today, right now, it's about stage 3, right? Stage 3, as I just mentioned, stage 3 is where you ultimately want to get to, and that's becoming a real estate professional, right? By working on your property full-time, more so than on any other job, 750 hours minimum, and have material participation in your properties, okay? As I mentioned before, it can be you and your spouse. One of you can be the real estate professional. You can keep your high-earning job, okay? You can do that, and most of our students do that, okay? This example is just one of those. So we have a student, he's in a transportation business, he has a decent income, his wife stays at home managing the properties, okay? All right, and so they had, in 1 year, they made $300,000 in their commercial real estate and their job, okay? It's about $25,000 a month, so pretty good, right? And they were making just $100,000 a year. Now they make $300,000 a year, and with their job and their commercial real estate, they still have the same. They can write off their mortgage. Okay, they're going to write off they're contributing to their IRA. They're going to write off. Now look at this. Look at this write off. So here you can only write off your small home. Here you can write off $75,000 worth of your mortgage interest payments here, because you have commercial real estate now. So much larger write-offs. Okay. Now, this large write-off, you normally couldn't take it over here because you're not a real estate professional. Again, when you are a real estate professional, you have unlimited write-offs. This is where you want to be. Okay, so they can write off all of their mortgages here. They can write off the depreciation of their property. We call depreciation hidden cash flow, right? So let me explain. Let's say you bought $1 million property, and they did. Okay, 30% of that $1 million property is associated to land. You can't depreciate the land, but $700,000 remaining of that property we can write off over 27.5 years. Okay, so basically what you do is you take $700,000 and you divide it by 27.5 years, and you can write that off every single year. Okay, that's about, I don't know, like 25,000, something like that per year. You can write off over the next 27.5 years. Incredible, only because you are now a real estate professional. Okay, all right. So they get all this depreciation they can write off. Right now, they were able to accumulate this number. This is a lot of depreciation per year, right? Because they were disciplined while in stage 2. Okay? Remember, discipline equals freedom. So while you're in stage 2, you have a paying job. You buy your first small apartment building. Don't stop there. Buy more until you can get to stage 3. Okay? So they were disciplined over the years. Okay? Commercial real estate takes years to make a lot of money. It takes years, but it's worth it. Okay? It changes your life. They can write off an additional $7,000 in additional write-offs. They have a home office. They use their car, eyeglasses, trips to the property, stuff they buy. They can write off all of it now. Okay, all of it now, because even though the husband works in transportation business, the wife is considered the real estate professional. So combined, they get all the write-offs. Okay, all right. So. And then what they did here was something called a cost segregation study. They're going to take an additional $100,000 write-off from one apartment building. Okay, so one apartment building gives them an additional write-off from their taxes, $100,000. Okay, I have a video that's going to appear at the screen. It's going to teach you what a cost segregation is. Basically, what we're doing is we're taking the building, we're taking the parts of the building, we're taking the appliances of the building, we're taking the carpet, draperies, and instead of writing them off over 27.5 years, we're writing them off over 15.5, or sometimes even the first year. It's called bonus depreciation. It's something that you need to Google and check out. It's called bonus depreciation. Do it now because it is slowly fading out over the years. Okay? Right now it's fantastic. Over the years it's going to fade out. This is why you need to buy commercial real estate today, okay? Not 3 years from now, waiting for a better market, okay? A better market is not going to come in commercial real estate, all right? You need to do it now, okay? So watch the video and you'll see exactly what cost segregation can do for you. It's amazing. It will save you on a smaller apartment building. It will save you hundreds of thousands of dollars in taxes, okay? It will, and it's completely legal. Again, this is what the big boys do, right? The big boys, they have these huge buildings. They write them off. They never pay taxes. Okay, now watch this. Okay, so he had $300,000 of income from his job and from their commercial real estate that they earned. All of these write-offs, they end up with a loss. Okay, $300,000, and they have write-offs of $350,000. So they have a loss, okay, of $50,000. Okay. That is not negative cash flow. That is a paper loss. Okay, it's only on paper. On their tax returns, it shows a loss of $50,000, even though they pocketed, okay, in their pocket $300,000. Okay, they pocketed that amount of money, right? But on paper, it shows a negative $50,000 on the tax returns. How do they do that? By becoming a real estate professional and being able to get all of these write-offs, okay? You can do the same thing too, okay? These are just average people. They're great people. They're just like all of us, okay? All right. And so when you have a negative, with this negative $50,000 loss, okay, this means this year, our student made $300,000. He pays 0 in taxes. How would you like to have that happen to you? 0 in taxes, but guess what? Next year, he started off he's able to apply that negative $50,000 into the next year. So he's starting off negative $50,000 in the hole, right? So he doesn't have to pay taxes, hopefully, next year as well. And next year, guess what he's going to do? He's going to cost seg his other property, right? Get another $100,000. So he can keep on doing this as long as he stays, so long as he owns the property, right? You can only cost seg one time, right? But hundreds of thousands of dollars in tax write-offs just by being a real estate professional, okay? How do you get there? If you're going to start at stage 1, owning nothing, just having a nice job, that's fine. Don't stay there. Get to stage 2, buy a small property, and then you can work with us and build yourself up until you become a stage 3 smart commercial real estate taxpayer. Got it? All right. So I hope this is helpful for you, right? If you're stage 1, don't stay there, okay? Give us a call. We can help you out, all right? Now, if you, like this student here, who's pretty much local to me, if you want to be helped like him, you can apply to our mentorship program, or how about just, just reading our book. There's a link that will appear on the screen. Just click the book, just read it, and just get started. But if you really like this video, go ahead and just click like. It helps us, right? Create more videos like this to help you, all right? So thank you, everyone, and I'll see you at the next video.